picture. One plank of the macro might be what happens with the UP elections, which have kicked off today. The results are on the 6th of March. So a lot of expectations that the outcome in UP will be favorable to the UP at the center in terms of coalitions, and that might unleash a powerful policy wave. Tirthankar Patnaik of Religare Capital Markets has authored a report on that. He's with us now. Tirthankar, good morning. You've written a report on implications of UP elections, but in this rally of the last 5 weeks, would you say that some part of that has already got priced in, those expectations?
I think the market is looking at an improving performance from the Congress. It's hard to beat their earlier performance of what 22 odd seats out of 403 on the downside. So yes, the market is probably factoring in some positive impact from the Congress. What of course matters is if they're able to form the government either on their own, which is less likely than and in a coalition with the with probably the Samajwadi Party. And if that happens, then the market would see it as a much bigger fillip for the Congress, simply because as you pointed out, you might see an alliance at the center which will be more in support of reforms going forward.
The results are on the 6th of March, the budget is on the 16th. Even if the results go the way the market expects it or hopes it will, do you think there will be enough elbow room or time to weave in any powerful measures in the budget, or we will probably need to look beyond that for any kind of affirmative policy action?
I think it will not be, there won't be much time to do anything in the budget per se, and but let's not forget that the reform pipeline that has to happen, it will probably happen post the budget. There is an meaningful amount of window available post the elections all the way until December when you have the next elections. So the political climate or the calendar looks reasonably clean. So you do have an opportunity to get the numbers up, get reforms up during this period. What matters is with an improved mandate, the Congress would be able to push in some of the reforms or some of the key executive decisions, not necessarily legislations that had not seen the light of the day earlier. I'm talking about multi-brand FDI in retail, any kind of a roadmap for auto fuel deregulation, something that's one of the major burdens on subsidies in this year as well as next year. So the Congress has, with an improved mandate, the window to do such a take up a reform program again.
Tirthankar, hi. Two-part question. Everyone's working with the most bullish outcome, which is the Congress and the SP. On your barometer, what is the most bearish outcome from the market's point of view? And second, some of your peers point out that assembly elections generally have a much more limited impact on the market. Why is it different this time?
So, you're right, assembly elections generally have a much more muted impact. One only has to see at what happened with the elections last year and compare them with the elections in 2009 or elections in 2004. Both time general elections had the markets hitting positive and negative circuits because obviously general elections are far more important for the for the country. But this time it's sort of the market has sort of seen this as a performance check for the Congress's performance, for the ruling parties, the coalition's performance over the last year and a half, where we've seen in addition to inflation and slowing growth, policy paralysis, a lack of decision making at the center, or probably delayed decision making at the center, a lot of resistance towards passing improvement, a lot of resistance towards passing legislation as one of the key hurdles that the government has had to face. So the market is building up expectations and also let's not forget that UP, given its number of seats, could also in the event of a Congress win or a Congress decent performance, give the party the required number of seats at the upper house, the Rajya Sabha, where like last year where Jan Lokpal bill or the Lokpal bill had gotten scuttled. So there's a two-way metric here. Basically the market is looking at a performance for the Congress. It's basically a report card of what has happened in the last year and a half.
Opinion polls seem to suggest, though, Tirthankar, that the UPA is actually losing popularity, and unfortunately enough, it's not like the BJP is gaining ground. It's only some of the regional parties. The general elections are, of course, a bit far off all the way back in 2014. But would you say that the market should be a little worried about the broader trends here, aside from this assembly outcome, on what's happening with the government at the centre?
I think it would be hard to take a call solely based on exit polls, and what that could actually imply is if regional parties are gaining strength at the expense of the central parties, it would essentially just point out, in my opinion, to a coalition-led government at UP. That's the ruling dispensation that might come about. And in terms of the broader outlook, see. If you pass FY13, then one is within gunning sight of FY14. Typically, fiscal profligacy picks up as we go near general elections. So in terms of taking tough and unpopular decisions, it would have to be around this time. So,
thanks, Tirthankar. Good to talk about your report. That's really clear on the implications for the market from the UP elections. Markets done well this morning to avert a Bharti-led correction. Bharti is still down 5% and it's a big stock, and aviation stocks are down, but the market's moving ahead undeterred. 53.70 near.